Hello, Warriors. Hi, Michael, Paul, Ryan. Hello, Forex Scale, Andrew, James, everybody, Patrick. How's everyone doing today? Hi, George. Barry. Good morning to you. Dollar still maintaining that 103.80, so kind of trapped in this zone here. Between 103.80, 104.25. Let's see something here. Apple breakaway gap to the downside. That makes me feel pretty good.
But
Michael.
what's interesting about that, Dale, is that we were just watching it yesterday break down, but in video just took the helm. You know what I mean?
Yeah, that's why it's a market of stocks and not just a stock market. So maybe we get a little pullback in the metals, pretty good follow through in the miners from Friday's reversal. To show you a couple. Newmont up another 5%, GDX4, and the silver miners that I own are acting pretty good too. This is Endeavor. So looks like a bottom to me in the miners. So there still are people saying this could be a failing rally in gold. I don't know. I can't see it. Um, yeah, yeah, that was yesterday. So Ron, what are you thinking in here? Cable, Euro.
Morning, Dale. How you doing, mate?
Morning, morning. How are you?
I'm all good, mate. I'm all good. Hope you are too.
Thanks, buddy. So we're going to go for the 108. Here's the question. Which stops do we go for first? Here or here?
Oh, that's the question, isn't it? I think we might
It
find
is.
out later on with this ISM data.
Okay. Yeah.
And knowing our luck, it will stay right in between those two lines. It'll hit
Yeah.
108.95, or it'll hit 108.05.
Okay. The commodity currencies. Yesterday I said I didn't think USD CAD looked like a top, which kept me kind of not wanting to press the short side of the dollar. Still looks okay.
Yeah, it's knocking on the door, isn't it? Up there, that
Yeah,
136.
yeah. And Aussie, it's taken out last week's lows where, that would be comparable to 108 in the euro and cable 126. So it's a tough call. Almost a coin toss, isn't it?
Yeah, we've
The
got to let
dollar
the, let
here.
the data do its thing, I think.
Okay.
126 might be the support from here if it's a strong US number. If you can't get through there, it might give people opportunity. Same on the top side, that 127, 60, 70 area.
And I think the yield's 10 years back under 420. Yeah. Tried to hold yesterday. Look, I don't know if we're going to get a rally. I guess it's going to have to be triggered by some news.
Yeah.
And I think Nvidia's called lower today. Let's see here. Maybe not. I thought I saw lower numbers there. Microsoft, yeah, they're not showing the aftermarkets in that. So let's talk to Kman. The same thing in yen. We can't resolve it. We can't make
Good
that new
morning.
high. Good morning. We can't make that new high.
No.
And we can't break it yet either.
Mm-hmm. No, exactly. And you know what, Dale? I've been making a few plans for in case we get good data, bad data on the dollar. And the funny thing is that there's no yen in my plan this time. I find it extremely difficult to pick a side. The one thing that I would say is that if the data would be uh, risk positive, there may be a little bit of a push higher on the yen crosses, but the yen, I'm going to be quite happy to leave it alone for a while. There could be swings. It will probably swing on those data because they are US data. But I guess that the yen market is already waiting for next week. We had an additional piece of information overnight that Kishida is going to talk with other labor unions or workforces again on the 13th of March. So a lot is going to happen on that day because we should also have wage results or first results from the biggest union, and then Toyota is supposed to come up with a bit of a reply as well to wage demands. And I've got the impression that yen may be more of a spectator than an actor, or besides algo blips also.
Okay, because we talked about the crosses yesterday and showed the relative weakness of the Aussie, and it's sitting right here on moving averages, ready to take out last week's lows. You know, in the old days, this used to be a risk on, risk off pair.
Yeah, and it's not, and well, it's not really right. I mean, everything is like living its own life right now, because yesterday it was looking to me like Aussie dollar start of the week could have a little bit of a test higher, and it's gone the other way around. So the Aussie and the Kiwi, the way they have reacted over the past 24 hours, those are two that that are on my radar in case we get good US data, because they look already a little weak and perhaps not too much needed to give it a push over the edge if the US data continue to be good. And on the other side of the spectrum, I think sterling perhaps, if US data start to print weaker, perhaps cable is going to break that 127 figure a quarter. It's kind of the plan, and then more medium term dollar Swiss. If that goes through 89 on good data, then I think we're going to need another extension to the dollar Swiss to the top side as well.
What about silver here?
Well, it finally tries to catch up, right? It took a while, but now it's catching up on what gold is doing. We are at some sort of a bit of a level here in silver, around 24, figure 10, figure 15, I think. But the big one is going to be 25, I reckon. But you know, I mean, slightly weaker US data, so may give it that push up to 24 and a half, 25 perhaps.
Yeah, pretty positive action in metals. It's almost like a long everything market, isn't it?
Yeah.
Stocks, metals, bonds, I don't know. Bonds,
I think we'll have
10-year.
the reply, I mean, the answer not too far a distance, and I would say rather the data than even Powell. I think Powell is going to be on autopilot pretty much right now, same as the ECB. I think the data are going to show us if we get more orange or red flags in the US, like especially on the employment side. That's, I guess, where your yields are going to respond a bit harder. And on the other side as well, probably.
Yeah, this was a pretty weak rally after this, don't you think?
435, 440. That's
Yeah.
always been my level, and we've banged our head against it. So that's your important zone up there.
Yeah. So, you know, something like this from here, that'd take you to 3%.
Ah, yeah, of
Well,
course. I
equality.
mean,
I'm just talking math here.
Yeah. But there were some events. I mean, starting end of October, starting November, you had a massive bond buying. Those who were short bonds starting to massively take profits and stuff. I don't know whether they have as much to do, you know. But hey, there's never say never. If the jobs market, which is the a very, very big domino, if the jobs market rolls over, then there's not a lot that can't happen in those markets, because we've seen those bond markets react pretty violently.
Yeah. Okay, so what's the number today at 5:30? Well, I mean in 20 minutes.
We're looking for
Nothing.
ISM. That's going to be a little bit later this
An
morning.
hour and a half.
Oh,
Wow.
okay.
Yeah, ISM
All
is the data.
Okay. All right, energy, you know, natural gas finally turned up in a fairly big way in the last week or so. It's almost back to $2. But you know, there was divergence, but at 20, so I don't know if I trust it. And maybe that what we did in crude was clean out the stops over this high, and now looks negative again. You know, this looks like the 10-year yield chart. You had the big break, and then you had some, I didn't do any fibs, but doesn't that look kind of similar? Look at that. Look at that. We have a new correlation. 10-year in oil. I mean, you can't deny that the patterns
It's
aren't similar, right?
it's a
Yeah.
tighter one than oil and CAD at the moment.
Yeah, that
Yeah, or
one went
Swiss
out the
and gold.
window. Huh?
Or Swiss and gold. That's another one you can throw in the bin for now.
All right. Yeah, so we'll write a little piece, the new correlations in an insane market. So crude looks ugly again. Anyway, S&Ps, can we pull back to 5,000? It, you know, wouldn't be a surprise.
Hey Dale, take a look
Go
at the equal weighted S&P chart. It's the RSP. It's really struggling here at the recent highs.
Okay. But I won't have your great lines on it.
Well, I don't have any lines on it. It's really just it's just right at the highs there.
This is it, right?
Yeah, go up to the daily. And then zoom out. Yeah, there you go. Zoom out if you can.
You know, now that you brought that up, you know, it looks even a little heavier than that is the Russell.
Yeah, we just posted that in the chat room just a little while ago because it is really struggling at previous support. So,
yeah,
and that previous support goes all the way back into 2021. So
you have a nice little 2 drive. Look at the glaring divergence on the daily compared to this high. So if we're going to get a 3, we should have maybe some kind of pullback here and then maybe one more thrust. But that looks, you know, heavy to me. Non-confirmation. You know,
so here I'll grab the charts and I'll show you over here.
Okay.
Going back to the RSP, this is the equal weighted S&P. I don't know if you guys can see that now. You can see how we're just kind of struggling with these highs, and that's again equal weighted S&P. You know, how much validity do you put into it? Well, you know, if you're thinking it's, you know, just because you have 1 or 2 stocks that are moving, you know, this is obviously everything else. But then the Russell, as you were just talking about, Dale, is these are the previous lows from way back in 2021. And you can see we're pushing right into that area. So yeah,
Okay.
you're right. Massive divergence. That doesn't mean that the market should reverse here, but it also does suggest that if we do see a pullback, and let's say the S&P does, you know, struggle around this resistance here, After we hit this 161% extension yesterday. If we do end up struggling here and we pull back, like let's just say into this channel, and we get back to 5,000, you just mentioned that, it doesn't mean you should necessarily be short the S&P. Why don't you turn your attention into, to Apple? You pulled up Apple a little bit earlier. I mean, Apple's getting it broke down, and we're probably going to get to the lower end of this range now. So then once Apple, develops a double top longer term, that's when you really got to start getting a little worried. But again, if you're going to focus on things on the short side, instead of focusing on the S&P that's been so strong, or the NASDAQ 100, why don't you look at other markets that look weaker? And if you guys are not like especially those of you that are not in the United States, if you trade CFDs, trade an Apple CFD, just get on the short side of that. It looks like we have a couple dollars of move to get through. We're at 175. Well, pre-market we're at 171. Damn, it's down again. George, I think, mentioned there's a big fine in Europe, antitrust, I believe. Anyway, it's trading at 171. We still have $5 of downside here in Apple, but that's going to weigh on the market too. You guys discussed yields, and yields look a little vulnerable here. And it's interesting because yesterday I wasn't really sure what the hell was going on, because we came back and rallied back after looking like we're going to get a false breakdown on Friday. Looked like we were rallying back yesterday, but today it looks a little weak. How's that make you feel, Ryan? Because we're not seeing a big move in the dollar. We're seeing a little bit of move in the dollar yen, but rest of the dollar pair is not so much. How do you feel about this move in yields?
I'm just wondering if it's a little bit risk offish at the moment. Gold ticking up to fresh highs, yields coming off, has the smell of a bit of risk off to it.
Does.
There's no driver behind it. I did wonder, we had a headline out of Russia moaning about NATO and the UN active in the Arctic, coming on top of all the other stuff going on with Putin.
I don't want to interrupt. Well, I'm going to interrupt really quick, because you said, hey, is this Russian headline, is that what's moving gold? Because gold just kind of, started to turn. But wasn't it yesterday? And correct me if I'm wrong. Yesterday, Russia was accusing
Germany,
Germany, and the UK and everybody else. Right? It's Russia against the world right now. So and gold really took.
They have China on their side.
Well, yes, that's the World War scenario, right? But the move that you saw in gold yesterday, I think, was predicated on that headline. And so here we are again, getting a little boost from Russia. I mean, doesn't it feel like Russia's kind of being backed into a corner here? And I don't know. So anyway, sorry, Ryan, go ahead. So your headline here
is exactly that. It's exactly that. That just with yields coming off and gold going higher, it looks like a typical risk off move. And for want of any other headlines, might be 2 and 2 plus 2 plus 2 equals 5, but I have no other explanation for it.
Yeah. Okay. Sounds good. And we have not seen, and Kman, you're here to confirm this, but we haven't seen the yen pick up a risk off bid.
No.
But I would argue at this point, I would be in the camp of, okay, I hear what you guys are saying, but I don't see the emerging market currencies. They don't give a crap. Actually, the dollar, Mexican peso is below 17 and trading heavy right now.
Exactly. Correlations have been thrown into the bin. And the best one is Swiss gold. That's nowhere. And
right.
And no, but the thing is, the other thing about gold is that it all started after Chinese New Year, right, guys? We did the low on Chinese New Year week. We did the low in gold, which is very seasonal. Then it started to pick up when they came back. Then the stories about India, and now you had the Russian stuff. It's been going on for a while. The blow of the breakout has been violent and probably driven by stuff. But I heard as well that India was buying like truckloads of it. So it's again something with the Asian or Eastern side of this world buying a lot of gold again. Perhaps and it's all in the mix, you know, the Hamas situation not getting solved either. I mean, the Gaza situation.
I'm bringing this guy back.
Oh,
I'm bringing him back.
who
This
is
guy.
that?
I don't know, but he was a big
Oh,
meme for a long
yeah, I
time.
remember that.
I'm bringing him back.
Yeah.
All right. So anyway.
Okay, but then back to the yen. Yeah, it's all living its own life, and we've been talking about that already in the past, right? Yen is focused on something else. Actually, there's not a lot of currencies actually focused on risk right now, because if you okay, you could argue that Aussie a bit lower could be a bit risk off, not responding at all. So yeah.
Yeah, I mean, well, one of my favorite, and I happen to be long, but one of my favorite risk-off currency pairs would be the Euro Aussie. It did push into new highs today.
Yeah.
It did hit the 618, very divergent relative strength. So, which has been, you know, noted here on ForexAnalytix that we have, you know, divergent relative strength as we're hitting new highs. So that's a bit of a risk, but it is a risk proxy, if you will. But you're right, correlations have really kind of been thrown out the window, at least traditional ones as of right now. But that's when the market will reassert itself. You know, if things start to accelerate and we start to see some sort of worry really take hold of the market, which obviously there isn't right now. We're speculating that maybe you might be seeing a little bit of risk due to, you know, some of these headlines that are coming out. But if things start to take hold, you will start to see correlations reassert themselves. And there isn't any little suggestion of that as of yet.
No, because the FX options market is so quiet. I mean, we were looking at this no later than this morning, and if you look at the sterling vols, I mean, it's incredible. The cable vols are at the same price as the euro dollar. That's usually not the case. That is usually not the case. Just click on vols.
Yeah, right here.
Tap vols, and left. A little lower left. Click on vols. Look at those cable vols. The 1 month and so they are aligned with the euro dollar vols. It's that's a very very quiet market.
That is, yeah, because usually you've got a nice premium above.
Bit of a premium in the sterling, yeah.
Yeah, absolutely. Yeah, that's wild actually, and you know that's not going to stay that way forever. I'll just say it this much.
Absolutely not.
That much. And one of the other things is we have, as stocks are, you know, rallying to all-time highs, and we're sitting up here, the FX market has been eerily quiet, which, you know, if you're out there selling dollars, buying whatever the hell else you want to be buying because, you know, assets are moving higher, you're probably pretty frustrated right now. So if you're trading traditional risk on in the FX market, it's not working. And that's the thing that I think everybody's got to be aware of. One of the big ones to me, and I was playing the US dollar Norwegian krona on the long side until yesterday. Yesterday, when we spiked up here, I got out of it. I've been buying it since 1040, since we completed this little, equal leg move. This is one that really stands out to me, that, you know, you had this very, very, you know, strong risk on move, and the US dollar Norwegian krona should be a whole hell of a lot lower, and it just isn't. And I think that this divergence that you see here, you can clearly see it right here, S&P in the orange. That divergence between those two, I believe that if the S&P ever turns lower, the US dollar Norwegian krona is going to spike right into, those what I thought was generational highs, or at least I think is generational highs. But I don't know. I don't know. Those might be revisited again, in this situation. So that's one that sticks out to me. All right. So ISM, Ryan, what is your best trade right now? Dollar goes up or dollar goes down. What is going to be your best trade? How are you going to play that today? How are you going to express it?
Range edges. I'm going to watch euro dollar up into 109, down at 108.
Okay. So you're going to play this range right here. Basically, let me grab a little drawing tool. 109, 108. This is your range. We happen to be right in the middle of the range. So you want to play the fringes of that.
Yeah, exactly.
Got it. And just so everybody sees it, we're kind of trapped. Well, right now we're in between the 200-day DMA and the 50 DMA. So, a move above to 109, you're going to be outside of it, but still, near that big spike high from a couple of weeks back. 108, really big support. Okay, so you want to trade this range. Anything else that's on your radar?
Well, you can take the top side up to that 50 fib 109.17, whatever it is.
Right there.
That's look at that as a potential extra mile, if you like.
Yeah, just in case, right?
Yeah. Also keep an eye on S&Ps as well. We've been testing the breakout area 51.12 after making that high 51.50, which looks a little bit of an overextension. If you look at it on the shorter term chart, like a 15-minute or something, just that spike up to 51.50. That's your little blow off pressure valve release. I think that move. But here we are testing the breakout point.
Yeah, it was a big resistance yesterday that we were looking at 161% extension. Did hold, so that's pretty key. So I think you're right in understanding that a break above 150, 51.50 though. That's when we turn it back on again, right? For new highs. So,
yeah, exactly.
All right. Kman, what are you looking at? What's best for you to play on strong data, weak data? How's the market going to react?
Well, I can't disagree with Ryan, and for the simple reason that I mentioned earlier about those option vols, they are still very low, and so that means that people can buy cheap options and will probably have interest on the edges of the latest ranges. But assuming we get breaks or decent moves and look away perhaps from the euro dollar, as I said earlier, I think good news for the dollar is likely going to put more pressure on the Aussie, the Kiwi, dollar Swiss topside. Bad US data, I'd say cable has a chance of pushing through that 127 figure a quarter. And perhaps, dollar max hasn't been reacting too much to all those Trump stuff and the walls and things, and or not too much anymore. So weaker data, perhaps a little push lower on the dollar max. Strong data, by the way. I'm going to have a look at the dollar rand again because we may push up again if the data, but they should be relatively strong to start pushing up again.
Yeah, we were discussing this in the ForexAnalytix chat room, and if you guys don't know some of these conversations that we have about like the dollar rand this morning, you should be taking a look at some of these conversations that we have inside of the ForexAnalytix community. So you can be chatting with people just like this is us having a conversation just a little less than an hour ago. That's where we talk in depth and detail about some of these developments that you see here. Now, for me, I'm gonna tell you guys, I think that the dollar Canadian looks ripe. And now remember, we have Canadian news coming out this Friday, obviously with the Canadian jobs report. But look at how the dollar Canadian is drifting towards the 618 retracement. Strong data, is going to be. I think strong data is going to be viewed as, not so good for stocks. I think stocks are not going to, like it. But strong data is going to be seen in the dollar Canadian, especially if we can get above this 136.25. I don't necessarily love the dollar Canadian, but what I do love, and I'm long, is I love the Euro Canadian that's starting to break higher, above some resistance here. So I think the Canadian in general, and I know I've been leaning on it because I am trading not only the Canadian on the short side through the Euro Canadian, I'm also short Canadian yen, because Canadian yen came out of an ascending wedge. So I want to be, continuing to play this on the short side, and a big false breakout if you guys haven't seen that. But that's I want to play the Canadian dollar on strong strong US data. I think that that the dollar CAD is going to rally, and then on weak data, you guys got to be focused a little bit on the dollar yen. The dollar yen might be putting in some significant lower highs, and I don't necessarily think that the dollar yen's the best trade. I think some of the other yen crosses might be better trades, just to get the dollar out of the equation. But I think the yen is starting to look a little vulnerable, especially with yields coming off here. So those are going to be my dollar plays. And Dale, I know you have an interview, so I want to pass it back over to you. I hope you're feeling better today. It's good to have you here as always, and thanks for guiding us through the markets each and every day, Dale. So appreciate you. Don't forget tonight. Well, I say tonight, but it's actually tomorrow morning in Australia. We have Australia GDP numbers. So if you do have some Australian exposure, or you increase some Australian exposure following the ISM today, then just keep in mind that we do have that Canadian GDP, which will be out a little bit later, today for us in the Americas. So thank you, Ryan. Thank you, Kman. And if you guys don't listen to those guys every single day on their show, make sure you're listening to the Flow Show. You can register for it right here on our website. It is free. It's when Dale and I are sleeping, but Ryan and Kman are up and getting you prepared for the trading day way before we're awake. So make sure you catch them there.
Thank you, Blake.
Cheers, guys.
Hey, thank you, Ryan. Thank you,
Thanks, mate.
K-Man.
Thanks, guys.
Thanks, guys.
And Jerry Robinson, I'm trying to promote you. You seem to be declining. Accept, please, so we could get this interview underway.
Let's see, I'm going to help you try to find him too.
I got
Jerry. Is he coming over?
He's doing it now.
Okay, cool.
Thank you.
There he is. All right.
All right.
Cheers.
Thanks, Blake. Hello, Jerry.
Okay, Dale, can you hear me okay?
Got you now. And Jerry is the publisher, editor of Follow the Money Daily at FTM Daily. And there's a lot more money to follow you with, because I know you were a Bitcoin bull.
Yes.
You were constructive on stocks. I believe you liked silver. You liked everything last time we got together, and everything's been rising. So congratulations.
Thank
Nice
you,
calls.
Dale. Thank you
Nice
very
calls.
much. Yeah.
Are you ringing the register on any of it, or just
Well,
hold on for dear life?
I think there's certainly a place for trades, and we certainly do trade. We position trade, but no, from a longer term perspective, we're just continuing to dollar cost average into high quality assets, and we're pleased. We're pleased with the outcome. It's been working out very well, and the rally in Bitcoin, for example, perhaps we could focus on that, or
Share
whatever.
your screen, Jer?
Yeah, let me go ahead. Let me get my
Okay.
chart up here so we can see it. There we go.
All right.
All right. Yeah. So, anyway, so when we take a look at something like Bitcoin, in fact, let me just come down to a chart that's a little bit more clean here. And this kind of explains our philosophy on Bitcoin. Bitcoin is a strange asset, and many people are still trying to figure it out. We were so fortunate, Dale, to learn about Bitcoin early. I was introduced to Bitcoin back in 2012 by a guy by the name of Trace Mayer. who invented, by the way, the Mayer multiple, which is a technical indicator that's pretty popular with Bitcoin today. Anyway, he was a very early adopter, very, very early. And he told me about it, and I had no idea what it was. I did a little bit of research and started realizing, and the thing that always drew me to Bitcoin was the fact that I was a gold and silver aficionado because of the amount of debt in the system and the need for hard assets and a need for something that was finite, or at least seemingly finite, compared to currency, such as the U.S. dollar. And so when I read the white paper, the Bitcoin white paper, and I fully understood what was going on, I realized that this was a nouveau way, but also a very novel technological way of creating that finite nature, to recreate it, but using computer code and cryptography. And so I was instantly drawn to Bitcoin. And we've been talking about Bitcoin now for over a decade, and it's been really strange because this is one of those strange markets where retail investors get in first and then wait for the institutionals, to show up. It's very similar to the cannabis industry, where there's not a lot of institutional buyers in the cannabis market, in the cannabis equity market, because of all the weird laws, but retail are pretty much propping it up. So there's some early markets that retail can get into, and if things go right, and then the institutional herds follow, well, you get moments like this. So congrats to those listening who, took a chance and took a risk with Bitcoin, and are now being rewarded greatly as guys like Larry Fink at BlackRock now won it, which is a really great feeling to know that, it's kind of a validation, I would say. So our approach to Bitcoin has been to DCA every week. We double or triple that up whenever we're in this extreme value zone. We refer to this as a 60 to 80% discount range. This is something we use on high quality assets like Apple, or something like Google, or Tesla. These are really high quality companies that have great brands, and if they fall into a extreme value zone, which we define as a 60 to 80% decline from a previous peak, well, that's going to get our attention. And if we're buyers, well, we want to be buying more there.
Where would that put Apple? At 50?
Oh, yeah, Apple. Apple is nowhere near the extreme value zone now, and it rarely does, unfortunately. But and I say unfortunately because of a long-term view. Some people don't want it to go down, of course, but if you have a long-term view, you do want it to go down. So we do look forward to those dips. Well, anyway, there's Bitcoin, and there's a really interesting ratio we've been following, and this nailed it. And I would encourage those who like to follow this space to follow this metric. It's the Bitcoin and S&P index ratio, which we talked about last time when we were on this broadcast. But when this number crosses 7, it often portends a pretty meaningful breakout, and we got that. We were knocking at the door there throughout 2022 and 2023. We held that area back in 2021 and rebounded, but we took that out back in October, November, and that's really whenever the the Bitcoin price really began to rally. And this is the Bitcoin and S&P index ratio. So, I think this is a fairly helpful one. So, so it takes 13 shares of the S&P 500 now to buy one Bitcoin.
Interesting. So when I think of something that has declined that may have a heartbeat now, I think we got a pretty good signal in the gold and silver miners. A lot of them were down about that amount from previous peaks. I'm wondering what you're thinking here about them.
Yeah, sure. I would say, I think gold, in fact, I have a chart here on gold. There's a couple of
about the miners.
Yeah, the miners. Well, look, yes. Here's the problem with the miners, and I think that they're going to do great. I mean, they're obviously going to do great. The problem is that trading the miners can be very frustrating. Even those who are trading crypto miners, it's the same thing. They're beholden to balance sheets. They're beholden to poor management decisions. They're beholden to liquidity events, nationalization. I mean, there's so many things that can go wrong. So I don't tend to invest in the miners. I like the physical gold. I do like the physical silver. I keep a small allocation to both. as I do with Bitcoin. So it's, it's kind of, I view them all the same. And one of the things I've been pounding the table on for a long time is just, understanding that you don't have to have either or. You can have both. You can have some Bitcoin, you can have some gold, you can have some silver. Now, when it comes to the miners, we would expect them to have a really good run because they have been very suppressed. Let's just take a look, for example, at something like GDX, and GDX is a nice metric for the average basket of miners. And here you'll see that we've got a really nice rally bouncing off of that 25.50 low, which is where we were back in October. So we came back and revisited those lows. Now we're coming back up. It looks like a new 200-day moving average breakout is on the way if this sustains. And why not? With gold prices going up, why shouldn't we see that? Whenever we see gold, for example, whenever we see gold on the chart, let me go back to that chart here. You can really see on this particular chart, we had this big overhang on gold that was just really kind of frustrating the breakout, and we just kept having these long wicks. Really important here for those who are new to trading. I know you know this, Dale, but for those who are new to trading, you see these long wicks at the top of the chart here. These often portend a reversal. It's kind of a rejection of the price, of the higher price. And so when you see those long wicks like that, it usually means, not always, but it usually means get ready for a little bit of a consolidation and then a reattempt. And so we had this happen in 2020 where we hit this 2100 high and we backed off with that big high long wick. Then we got a long wick here on the bottom, as you can see. Hopefully you can see my mouse here kind of circling, and that area rejected lower prices. So we went back up and we got this really long wick on the top again. So indicating, okay, we'll get ready for a reversal. And sure enough, we did. We came down here, hit the 200 weekly, really important support area, came back up and did that long wick again, right at the same area. So frustrating moment here for gold investors, seeing it just continue to fight at this area. Now we've firmly taken that area out. Although this weekly candle, I guess, could turn into a long wick and it could reject this area, we're somewhat expectant that we're going to see this push higher and actually go on 2150, 2200. And the reason is because, we're beginning to see, we saw some weakening manufacturing data. I think that's what excited many gold investors. It was some of the weakening economy. I mean, that's been the problem, ironically, is that this economy has been simply too strong. And it's not something that we've been through the meat grinder for the last several years. 2020 was a nightmare. 2021 was, kind of like a dream. 2022 was another nightmare. 2023 was, I think a lot of people we were talking about this last time, Dale, about the reason why we expected the market to go up, but why people hated the rally was recency bias. They were so caught up in 2022 and they had heard all the analysts say, oh, it's over. And so they said, well, it can't go up now. It's already, it's down. It has to go down. It has to keep going down. That's what they said. But of course, it starts going up in 2023. 2024, once again, Dale, I'm curious about your experience on this. I want to ask you a question, if you don't mind, because I was thinking about you last night. I was sitting around thinking about how I had never seen. Let me pull up a chart of the S&P 500 here, and we'll just make it nice and simple. And let's just go to a weekly chart, a nice, pretty weekly chart. Let's go for, 6 months is fine. Okay. So, Dale, I don't recall a period of time where we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. We have had 16 out of the last 18 weeks up. I went back and I looked in my almanac, right? I'm like, when does this happen? When does this ever happen?
Because it's never happened.
Dale, I've never seen anything like this. I have all of my experience. I mean, I've been doing 25 years. I've never seen anything like it. I've never seen anything like it. 16 out of 18 weeks. What do you compare this to? What do you think is, I mean, I know I'm the guy being interviewed, but I'm curious with your experience, what do you make of 16 out of 18 weeks up on the S&P? What does that mean?
1929 eventually when it's over.
Well, there's always that possibility. I hope people have had their coffee.
Yeah, one of our attendees is requesting, if you have it, your Apple chart. You have an Apple chart?
I do. Let me come over here and see if I can pull that one up here. Yes, I do have an Apple chart. I just got to grab it real fast. Meanwhile, Ethereum there on the screen, that's been a rip-roaring rally. What a rally. Okay, so now Apple. There she is. It's a little out of date. Let me just spruce it up just a little here. But yeah, here's an Apple chart that I like to use. Here's the long-term opportunity zone that I look for. Okay. I'm a long-term Apple buyer. In fact, a long-term Apple investor. It was my largest holding up until the beginning of 2023, whenever NVIDIA overtook it. And NVIDIA now is our top holding. But Apple is a close second, and it's been falling. It recently lost its 50 weekly moving average, a very important area. And so what we would like to see is Apple pull back to this 200 weekly. Any touch of that we would consider to be a significant buying opportunity, and we would add. I'm not a bear on Apple. I know that it's probably in vogue to think that it's over. The new Vision Pro that Apple put out is mind-blowing. And to me, the reason why Apple hasn't had a rip-roaring rally this year is because they haven't come out and said, AI, every other word. Whereas other companies have been taking advantage of that. Apple recently shut down its iCar division, whatever you call it, Project Titan. They were working on a car, and that's the hardest nut to crack in AI. So they had the smartest guys in the room working on the car. And I guess they saw the new Roadster from Tesla, or they just saw the writing on the wall. And they said, you know what? We're gonna focus in more on spatial computing and AI just for more consumer products as opposed to automotive, which I think is probably in the long run a good move. The problem with that is that dashboard. You're probably going to have a Google car. You may have certainly going to have a Tesla car. Of course, you already do, but you're going to have these other magnificent 7 companies. Facebook, that dashboard is going to be on the car. Whatever operating system is dominant there is going to be big. So Apple kind of forsook that, and they have a lot of smart guys and some of the smartest guys in the room working for them. So I'm very bullish on what they're going to be coming out with, especially at the WWDC event later this year. I think it's in June, where they're probably going to announce some new things related to AI. But I'm very bullish on Apple longer term. Definitely.
One of our attendees, Barry, says that sounds similar to their decision to retrench when BlackBerry was so dominant.
Yeah, there you go. Exactly. Yeah, we have some precedent for that. Yeah, and I had mentioned NVIDIA, and this one, again, this chart is just, it's hard to imagine what's happened here. This one's just off the charts. But, we launched at our website's followthemoney.com for those who want to follow us there. But we were telling our members that, look, in 2022, everybody was throwing in the towel on NVIDIA. So this is the region where we said, hey, we're going to start buying NVIDIA. And so we just started buying. We started adding to our position. And we just got, started DCAing every single week all the way into the end of the year. And that really paid off. This rally we've seen since, it's really mind-blowing. But I think that NVIDIA, when you look at it on a forward PE basis, it's really not that expensive compared to things like a super microcomputer or some of its even AMD. So NVIDIA and Apple are our 2 largest holdings. And when it comes to crypto, of course, it's Bitcoin and Ethereum. You had mentioned gold miners and silver miners. We think that those are very, very much beaten down. There's a lot of opportunity there. There's also potentially some opportunity for those who are looking for, potential markets that could rally. Lithium is wildly oversold.
Yeah.
That's really come down hard. You know, some of like the largest, the largest lithium producer that comes to mind here in the United States is Albemarle. And Albemarle has really beaten down. That's one that people, could be looking at.
And you
Or
brought up cannabis, where only retail's in because of the legal action too,
yes, cannabis.
which is changing.
It is changing. Yeah, I think there's a tremendous amount of opportunity there, especially now, because with cannabis, for example, I started investing in cannabis a long time ago. So I'm actually down on most of my holdings that I bought in cannabis over the long term, because I started acquiring what I consider to be the top uh, MSOs in that space. Those are the
Is Cureleaf one of them?
Yeah, Curaleaf is one of them. In fact, I have a chart on that. Let me pull that up. I got a chart right here. Here's using the extreme value zone that we were talking about, where you have a 60 to 80% discount from the previous peak. So Curaleaf was 1840 back in 2021. That was the peak. I do like Curaleaf, and they have a really aggressive global plan. They're certainly in Europe, and Germany just legalized. And so that's good news for Curaleaf, but also they have a very good strategy here as well. So I own Curaleaf for the long term, but as you can see, they're really beaten down. And fortunately, I've been able to average down. I never average down on trades. When you're trading, if you're trading and you're buying something that you think is going to go up, for example, you're going long and you put money into it, well, and it goes down, okay, well, that's not what you planned. You didn't plan for it to go down. So I don't like to average down on trades. But trading is not investing, and investing is not trading. So when it comes to investing, if I have a conviction on something, then I will average down, because it helps my cost basis over the long term. So if I have a 10-year, 20-year time horizon, well, yeah, of course I'm going to average down at some point. It's just the nature of it. But when it comes to trading, I
haven't you
wouldn't do
ever
that.
had an example of averaging into oblivion?
Well, yes. I mean, there are those.
You're buying a stock and it ends up being diluted and reverse splits
Of
and that
course.
kind of, yeah.
That's the risk, and that's why I stress the high quality, and that's why it's so key to really have conviction on things. So, and especially things like cannabis, for example. I mean, that's a wildly speculative market. That's not something that would take up a lot of my, available capital. I mean, I wouldn't be putting a ton of money into those things. The same thing with crypto. Crypto is wild. Here's Ethereum. Here's Ethereum, for example. This one's going to be the big one with a spot ETF later this year. They've been focused. The institutions are very heavily focused upon Bitcoin. I think institutions, Dale, are going to like Ethereum even better than Bitcoin, because Ethereum pays a yield, and Wall Street loves yields. So I would imagine they're going to like this one, and they're probably going to.
I'm assuming you don't mess around with the altcoins much.
Well, we have. Let's just say this: the majority of our stake is in Bitcoin and Ethereum, but a lot of the smaller altcoins, they're probably going to outperform in this cycle. But it's like eeny, meeny, miny, mo. It's like throwing a dart. I mean, which one's going to work? And you can certainly do it. I mean, every time we have this cycle, we do move into a time where you have some amazing gains. I'm thinking, like, for example, in 2021. Bitcoin had a really healthy run, and so did Ethereum. But you had things like Sandbox and Phantom and things like that went up like 14,000%. In the year. In 1 year. And so you think, well, Bitcoin didn't do that. And Ethereum. So yeah, I mean, for people who want to speculate, there are fewer better places, in my opinion, than to altcoins. If you want to trade and you want to, try to speculate, man, I mean, it's hard to beat. You've just got to spend a lot of time turning over every rock, and then you still may be wrong. So
right.
We don't want to raise hopes needlessly, because it is a very tough environment. But
it's like the bulletin board.
Say again? Yeah,
it's like
exactly.
Pink sheets, right?
Right, exactly. Yeah, we like Cardano, for example. Cardano's been one we've liked for a long time, and it's on the run. it's one of the top 10. And I think, I think looking at the top 20 cryptocurrencies is also very helpful. You go to something like Coin Market Cap, and you're able to see, all of the coins listed by market cap, which is very helpful. Or another thing that you can do, Coin Market Cap is really great, as I mentioned, because they're all ranked by market cap. So you can see, Solana number 5, XRP, Cardano, and then of course you have these meme coins that work their way up there. But then there's another really helpful site called Companies Market Cap, and Companies Market Cap, and actually you can rank these by all assets, and you can come in here and you can see everything in context. So top assets by market cap. And so you have gold on top. It has a market cap of 14.3 trillion. And so that, that trumps everything. But then Microsoft comes in second, with a 3 trillion, 3 trillion market cap, and then Apple, and then Nvidia, it's amazing, number 3 now. It was less than 20, or it was further down the list than 20 just a year ago. But then you can see silver here, number 8, and Bitcoin.
Yeah.
I mean, Bitcoin's almost getting ready to flip silver. That is going to be quite something.
I was surprised gold was number 1.
Yeah. 14 trillion
by a mile.
By a mile. Yeah. So the big narrative is Bitcoin's going to flip silver, of course, at some point. It looks like it's going to happen maybe even this week or next, or maybe this month.
By
or who
10
knows.
o'clock today.
Yeah, exactly. But as far as gold, that'll be quite the flippening. I mean, if Bitcoin overtakes gold, which many people think that it will, that would be pretty wild. And I think that would probably signal some sort of crazy moment in market history. I mean, that would certainly be weird. But there was something kind of savory about Bitcoin overtaking Berkshire Hathaway, because it was Warren Buffett and Charlie Munger that called Bitcoin, rat poison. And so to now see Bitcoin larger than Berkshire, there is some sort of sweet satisfaction, I guess, for Bitcoin bulls in that.
Yeah, Jeff Gunlich feels the same way, and he's not a dumb guy. So yeah. You know who he is, right?
Sure. Yeah, he feels the same. What do you mean he feels what way now?
Well, he says a lot of people are doing it because they feel like they have anonymity, and it's exactly the opposite.
Sure. You mean buying Bitcoin for anonymity?
Yeah.
Oh, yeah. No, it's exactly the opposite, which blows up the SEC's argument that only drug dealers use Bitcoin, because, I mean, who's going to use a public ledger to deal drugs? I mean, you'd rather use
cash.
Cash, exactly. So, yeah, it's a dumb argument to say that Bitcoin is used for illegal, illicit purposes when
well,
the dollar is.
A lot of people, yeah, I guess a lot of people think that.
Sure. But
anyway, Jerry, you've been hot. Anything new that you're doing in the, looking to do here in the next few weeks or so? I mean, everything is lifted off. So it's tougher than it was a year ago to find value.
Sure it is. Well, let me close out with a dollar chart. I know you guys like the dollar, and you like to follow the dollar like I do. Let me just show you one last chart there. Let me pull this one up. And this will kind of show you what we're thinking. And this is also, this is the same chart I showed you last time too. We talked about this chart. And so as you can see, get my pen here. So the dollar had this really nice 200-day breakout back in mid 2021, peaked out about 115 back in mid 2022, came down, and now it's fighting right at its 200-day moving average. We continue to believe this is the ceiling for the dollar. The 107 to 108 never got taken out, never was able to retake it. This is the ceiling. The rate cuts are going to come this year. Who knows when? 50% of traders think it's coming in June. We'll see. But regardless, that we know what that means for the dollar. The dollar, that's the price of money. The interest rates are the price of money. So when you start seeing this price come down, we break down below 199, especially. Boy, it's all bets are off, and that's gold up, that's Bitcoin up, that's silver
Everything
up, that's
up.
Oil up, yeah, that's equities up. So
bonds.
Right. Well, yeah. Well,
the long
yeah,
end of the curve won't like
sure.
a depreciating asset.
Yeah, sure. So so
I
so with the
don't.
but with the dollar coming down, that's going to be the tailwind. And I
Yeah.
guess what we're seeing here is that the market is just kind of looking forward to that, and that may explain why we are seeing such, strength in the markets. Is they're just pricing that in, but again, when are those rate cuts coming? I don't know, but I do think that we're going to see that dollar fall when we finally get the confirmation, and that's going to be great for those miners you were talking about, gold and silver miners, gold. So I think we got a lot more upside for asset prices this year. We remain bullish.
Jerry Robinson, Mr. Bitcoin, Mr. Buy Value Zones.
If anybody wants to follow us, they can go to followthemoney.com. They can sign up for our free podcast. They can sign up for our
He's a gladiator. Look at that last slide. Jerry's been in the Coliseum fighting with his Bitcoin shield.
Well, Dale, I sure appreciate being on here. I sure do appreciate your time, and I appreciate your experience. The folks should be honored to have you on to share your insights, because I know you've been around for a while doing this stuff.
And you have too, Jerry. And congratulations on being long things that worked since we
Thank you,
last
sir.
spoke. Nice work.
Thank you very much.
All right. So Jerry Robinson, you could follow him on X at FTM Daily, and you could go to his website, followthemoney.com. Whether you're a trader, investor, Jerry has some great tools that he uses and his experience in the market to keep people on the right side of things. So I hope this is a great 24 for you, Jerry, 2024. And not
Thank you.
just in the
Yeah.
markets, not just in the markets, and in every way that it can be. For
Thank you.
your
You too, my
family.
friend. Great
All right,
blessings to
buddy.
you.
Thank you, Jerry Robinson, everybody. Okay, so I should say help me to manage with confidence. Okay, let's have subscribers in here. So that's a wrap, everyone. Don't just count your charts, count your blessings, and you could join the team in 13 minutes on the Morning Edge, and I'll see you tomorrow. Good hunting. Thanks, Chair.